Let me guess. You'd love to travel more for your business, but you have this tiny, terrifying fear of the IRS knocking on your door. You're not crazy. So many entrepreneurs leave thousands of dollars in deductions on the table because they're scared of messing up the rules. Well, today, we're demystifying it all. We're breaking down the official IRS rules so you can write off your next business trip with total confidence. Section 1, the foundation. Are you eligible? First things first, before you even think about booking a flight, you have to pass what the IRS calls the primary purpose test. Now, what does that actually mean? The solid rule of thumb is that business has to be the main event. On a 5-day trip, for instance, you'd need to spend more time on business than on pleasure. So, at least 3 of those days should be for work. And what counts as a business day? It's pretty straightforward. Meeting clients, scouting new locations, or attending a trade conference all count. Plus, here's a little bonus. Your travel days to and from your destination typically count as business days, which makes hitting that threshold way easier. The second big rule is you have to be traveling away from your tax home, which is just IRS speak for the city where your business is based, and you have to be gone long enough to need to sleep or rest. Basically an overnight stay. If you can check both of those boxes, congratulations, you're in the game. Section 2, the rules of the road, what you can deduct. Okay, so your trip qualifies. Now for the fun part. Let's go shopping for deductions. First up, getting there and back. 100% of your flight, train ticket, or bus fare is deductible. If you're driving, you can deduct the actual costs for your car, or just take the standard mileage rate the IRS gives you. Next, your lodging. The full cost of your hotel for every business day is on the table. Then we have meals. Now, listen closely here. You can only deduct 50% of your meal costs on business days. That's a hard and fast IRS rule, so don't try to write off the whole steak dinner, even if you did close a huge deal over it. Finally, all the little things add up. Ubers to a meeting, rental car fees, parking, tolls, and even Wi-Fi and dry cleaning. If it's a necessary business expense on your trip, it's deductible. Section 3, the red flags, what you can't deduct. Knowing what you can't deduct is just as important as knowing what you can. This is how you stay out of trouble. The number 1 red flag? Trying to write off travel for your spouse or kids. Unless they are a bona fide employee and their reason for being there is 100% for business, just don't do it. The IRS has heard every excuse. Next, watch out for expenses that are lavish or extravagant. This is a fun, vague term, but basically, if a standard room works, don't try to write off the penthouse suite with the private bowling alley. The expense has to be reasonable and necessary for what you do. And finally, pure entertainment is a no-go. Taking a client to dinner is business. Taking that same client to a football game or a concert is personal fun, and that cost is on you, not the taxpayer. Section 4, your audit armor, the documentation. Now for the most important part of all. Your audit armor. Because in the eyes of the IRS, if you can't prove an expense, it never happened. Meticulous records are your only defense. For every single deduction, you need to be able to show 3 things: how much it cost, the date and place, and the specific business reason. Networking isn't enough. Lunch with Jane Smith to discuss Q4 project proposal is. Keep a digital folder, use a spreadsheet, or get an accounting app, whatever works for you. If you're driving, that means keeping a mileage log of where you went, why, and how many miles you drove. Pro tip, start documenting before you even go. Save the emails with the client you're meeting or that conference registration. That's your proof of intent, right from the start. So let's recap. Make sure business is the main reason for your trip. Know exactly what you can and can't deduct. And document everything like your business depends on it, because it does. When you know the rules, you don't have to be afraid of them. You can finally make travel a powerful tool for growing your business. If this helped you, imagine what else you could learn. Hit subscribe for more tips on how to keep your tax bill from giving you a panic attack.